Hey everyone, welcome back to Corporate Decoder, the place where we pull back the curtain on the weird world of corporate filings to see if companies are really walking the walk or just talking the talk. Get ready folks, because today we're diving into a filing that has some interesting moves. Before we dive in, make sure you are subscribed and hit that notification bell. Also, we've got a fantastic community growing on Discord where we break down these filings together, so join us there. Link is in the description below. Today we are decoding a filing from General Enterprise Ventures Incorporated. Now this report is a Form 8K, which is essentially a company's way of announcing major events that shareholders should know about. Think of it as their urgent bulletin board. The earliest event reported here is the 15th of October 2025. This is crucial because it tells us when the company started taking action that they are now informing us about. The company is telling us that on the 15th of October 2025, something important happened. The headline here is about a significant deal. The company entered into what they're calling securities purchase agreements. Essentially, they are selling more of their own stock and some special options or rights called warrants to raise money. They are selling about 194,000 shares of a special type of stock called Series C convertible preferred stock. Now, convertible means these shares can be changed into regular common stock, sort of like trading in a voucher for the actual product. And they did this by selling these at $15 per share. That's a lot of money they're bringing in. Over $2.9 million in total, just from this preferred stock. Along with the stock, they're also giving away warrants. Think of warrants as a coupon that lets someone buy company stock later at a set price. In this case, these warrants can be used to buy over 323,000 shares of common stock, and the price to buy them is $6 per share. These warrants are good for 5 years. To help make this deal happen, they brought in a professional firm called Univest Securities Incorporated. This firm acted as a placement agent, which means they found the buyers for this stock and warrants. For their services, Univest Securities is getting a significant payment. They are getting a fee, which is 8% of all the money raised. So if they raise $3 million, that's about $240,000 going to the placement agent. Plus, the placement agent also gets its own set of warrants. These are warrants to buy another chunk of the company's stock. So the placement agent gets cash and more potential stock ownership. Now, here is a critical detail. The stock and warrants being sold were not registered with the US Securities and Exchange Commission, or the SEC. This is common for certain types of private placements, and it means they were sold primarily to what they call accredited investors, who are usually wealthier individuals or institutions that the SEC assumes can handle more risk. This section just confirms what we just discussed. They are selling these securities, these preferred stocks and warrants, and they are doing so under a legal exemption that allows them to sell without a full public registration. This is usually done because it's faster and cheaper, but it's aimed at sophisticated investors. This part is about changes in leadership. Companies must report when new directors are appointed or when important officers leave or join. So, on the 15th of October, just as the filing timeline indicates, 2 new people joined the company's board of directors. These are Lorenzo Calanorn and Craig Huff. Craig Huff has an interesting background. He's a founder of a company called Boltrock Holdings Incorporated, which is a family investment firm, and importantly, has already a significant shareholder in General Enterprise Ventures Incorporated. This means he has a vested interest in the company's success. He also has a deep history in investment, including Colt, founding another firm that managed billions of dollars. Lorenzo Calanorn also brings a wealth of experience, particularly in advising on mergers and acquisitions, or M&A. Hess involved in a firm that focuses on chemicals and materials. His career shows Hess advised on over $90 billion in deals. This suggests he has a strong understanding of how companies grow and restructure. The filing also states there are no special deals or arrangements that led to their appointment, and they don't have any family ties to current executives or directors. This is a standard disclosure to ensure transparency. This final section is like the appendix of the report. It lists all the documents that are being attached as exhibits to this filing. These are the actual legal agreements for the stock sale, the warrant forms, and the agreement with the placement agent. These are the nuts and bolts of the transactions we've been discussing. For example, you can find the actual form of the warrants that were issued, and the actual agreement that outlines the terms of the purchase of those securities. The agreement with the placement agent is also included. Now, let's put on our Warren Buffett hat and look at what this all means. General Enterprise Ventures Incorporated is clearly in a phase of seeking funding and strengthening its board. The PIPE offering, or private investment in public equity, is a common way for companies to raise capital quickly from private investors when they might not want to go through the full public offering process. They are bringing in over $2.9 million, which is a significant injection of cash. This cash can be used for various things like expanding operations, developing new products, or paying down debt. The appointment of Craig Huff and Lorenzo Calanoan to the board is also a strong signal. Huff's background as a significant shareholder and an experienced investor, along with Calanoan's deep expertise in mergers and acquisitions, especially in industrial sectors, suggests the company might be looking to grow, potentially through acquisitions or strategic partnerships. Their experience could be invaluable in navigating complex deals and identifying opportunities. However, we need to consider the risks selling unregistered securities, while legal and sometimes necessary, means these securities aren't subject to the same rigorous review as publicly traded ones. This suggests the company might be facing immediate capital needs or wants to move faster than the registration process allows. The warrants also represent potential future dilution for existing shareholders, meaning that if these warrants are exercised, more shares will be in circulation, which can reduce the ownership percentage of current shareholders. The fact that the placement agent gets warrants also adds to this dilution. Overall, General Enterprise Ventures Incorporated appears to be taking proactive steps to secure funding and enhance its strategic capabilities. The new board members bring valuable expertise that could propel the company forward. The key will be how effectively they deploy this new capital and leverage the experience of their new leadership. It's a move to fuel growth, and investors will be watching closely to see if this investment translates into tangible results and value creation. Alright, that is our breakdown of General Enterprise Ventures Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.